Hello and welcome back everybody to this weekly update on financial markets. I will cover with you like every week my four main assets, the S&P 500 index, US oil, gold and Bitcoin against the US dollar. Following my add-ons, a couple of single stocks, also some index ETFs, and new to the game also crypto. Everything marked in red is new on this weekly update. Everything else I have covered also in past episodes. But I will go through every one of these in this episode. You will see all my trades I have already taken and the trading setups I plan to take in the future. We will start with the S&P 500 index on the weekly, daily and 4-hour time frame and analyze price so that you know what to do in the next days and weeks. Let's start directly in with the S&P 500 on the weekly time frame. Here the S&P 500 index on the weekly time frame, you can see it's an intact uptrend at the moment at an all-time high level. I thought we would see here a corrective move. MACD was also declining at the daily time frame. You can see we had a divergence. Price was rising, MACD was falling. Normally what happened afterwards is a corrective move, and I was waiting for such a corrective move before the continuation of the overall uptrend. We haven't seen that yet. The weekly move to the upper side here is pretty stretched without a significant corrective move that we would need technically to endure continuation of an uptrend. But yeah, this chart is looking pretty bullish, and maybe we'll see a blow-off move to this first Fibonacci extension level here before then we see the corrective move and the continuation of the overall uptrend. I'm not sure yet. At the moment this daily uptrend is not broken yet, and will continue higher until we see break lower. Yeah, pretty bullish. Not in a trade yet. I was getting out, I think it was at this level here, out of my long position. That was also, yeah, nearly $2,000 profit in the account balance. Since then I'm waiting for this pullback, and the market is going and going and going. At the moment, no trade for me here. If we see a break, I'm not really willing to short the market. I think we will see a pause, maybe a couple of weeks, and then I would use maybe the bottom formation for getting again a long in the S&P 500 index and riding this major trend higher. Yeah, nothing to say more at the moment to this S&P 500 index, even at the lowest time frame, the 4-hour time frame I'm covering with you. Yeah, let's ride the long position. If you still have one, maybe reduce it if you feel uncomfortable with it. I think sooner or later we'll see the correction, but I'm not expecting a move lower than the prior all-time highs. Most likely, I would even say that we don't see prices below this 4-hour support zone here. That's all I have for the S&P 500 index. Let's switch to US oil. US oil starting also at the weekly time frame. You can see in a red solid this downtrend line. That's the monthly one in combination with the monthly support and resistance zone. We have seen the break out of this downtrend. Since then we have seen an ABC corrective move on the weekly time frame, and we have been able to draw an orange solid weekly downtrend line above it. The 200 moving average on the weekly was support, then it turned resistance. And until I see a break above this 200 moving average, future downtrend moves are in the cards. But maybe the lowest point of this ABC pattern is already in. It would look then like this. And of course, if we see a break lower, currency would also move lower with it. Yeah, we have seen here a violation of the weekly downtrend, but then it collapsed directly. This movement was absolutely news driven, and for that reason, yeah, it collapsed down again. We could argue on the daily time frame that we see here also another ABC pattern. Bottom formation could be building up here, and we have already seen the break of the secondary daily downtrend here. At the moment it's falling again. If we would see a move above this local high here, that could be a good situation for a trading opportunity right here. If we would see price develop like this or similar, Otherwise, I would stay out of trades, and maybe if we see lower lows here, I would readjust then my downward line and wait for a valid break to the upper side, building out higher highs and higher lows. And if we see that clearly, I would be willing to enter a long position again in US oil. Expectation is then we will finally break out of this weekly consolidation to the downside and see new all-time highs. Maybe not all-time highs, but definitely higher prices for oil. And the moment, no trades for me in US oil. If you see it different, write it down in the comments. I would be really interested in other opinions about this asset. Next, gold. Gold at the weekly time frame, and also the first asset in my list where I'm at the moment in a trade, in a long trade, like you can see. Makes sense if we have an intake uptrend. We had to struggle a lot with this $2,000 mark. After gold got above that one, we have seen only one way, and that was up with small pauses in between. At the moment, the last consolidation here was at a pretty high level, and the moment we have seen a break above this consolidation, I was using this to get into a long position with a stop loss below this consolidation. MACD was supporting this idea, and yeah, at the moment at all-time highs. If we drop one time frame lower to the daily time frame, you can see that on a daily, what was visible was a triangle formation, and at the moment we have seen prices above the last previous highs of this triangle. I was willing to enter long with a stop loss below the last significant lows in this triangle formation, and so far that went pretty well. MACD seems to cross to the downside. Coming week, maybe we'll see a pullback in price before then continuation higher. That would be only normal. And if I see a nice pullback and a break of the pullback again to the upper side, I would think about moving my stop loss to my entry level and take the trade with that risk free. My take profit target at the moment is slightly below the $4,000 mark per ounce in gold. I think that's a psychological price level again, and I want to get out with my long position slightly below that one before we find their resistance. But definitely possible that we will reach that one this year, or before the end of this year. So pretty bullish for gold. If price turns and we fall below this triangle formation, that would take me out of my long trade with $2,000 at loss, but I would make 2.5 times my risk. I think that's an attractive trading setup. And yeah, maybe if you are not yet in a trade, maybe you can use a pullback for getting into a trade. If you want to, like always, you have to make decisions by yourself. That's all I have for gold right now. And yeah, on the 4-hour time frame, you can see MACD divergence, but yeah, maybe that's another sideways consolidation or a small pullback. That would be nice. And then continuation of the overall uptrend. That's now really all I have for gold. Next is Bitcoin. Bitcoin starting also at the weekly time frame, you can see that we have an intake uptrend printing higher highs and higher lows. The only concern I have right now here is that we reach the first Fibonacci extension level, and in combination with that we have a MACD divergence, higher highs in price, lower highs in the MACD indicator. Normally means that we will probably see a corrective move. We have lost the 10-week moving average to the downside, retesting that one at the moment from the lower side. That could follow into another corrective move for the continuation of the overall uptrend into the end of this 4-year Bitcoin cycle, which is normally pretty bullish with all-time highs. We'll drop one time frame lower to the daily time frame. You can see the daily uptrend is also broken. At the moment we found hold at the prior all-time high, and yeah, the possibility is that we will rise from here, that this is the lowest point, that we got here a nice corrective move, and from there on we will see only now higher prices. Definitely possible, but I would be conservative and argue that it's definitely also possible that we'll see another move down before then we will see that will be the shakeout if we lose that support level here for a lot of weekends probably in the market, and Bitcoin oftentimes does that. And after everyone has sold, who's not absolutely sure with his position, it starts rising again. So yeah, I want to stay in this long trade definitely, because I think there's more to come for Bitcoin in this last part of this 4-year cycle. I'm already in a nice profit. My stop loss, I moved from my entry level. I have taken already the trade risk free. I have placed it now below the last daily support zone here and this weekly uptrend to be sure that I'm getting not stopped out and afterwards Bitcoin makes new all-time highs. I'm willing to risk here 2% of my account balance for this trade, absolutely, because I think the risk reward ratio is pretty nice. My take profit target is at $143,000 per coin, would bring me a $7,000 profit. My account balance, that would be pretty nice. Yeah, at the 4-hour time frame, you can see MACD divergence, higher highs, lower highs in the indicator. You can draw in here a 4-hour blue dotted uptrend line. We have slight violation right now of that one. If we see the break down, then you could probably yeah, see another pullback. If we see that one break below this lowest point of the movement and this daily support zone, I'm not sure, but I'm prepared for that move. And so you should be too, if you are willing to stay in a long position in Bitcoin. Otherwise, if you want to be absolutely conservative and not willing to risk here anything, then you have to wait for a new all-time high and enter there in a long position. Then I think momentum should be on your side and ride that one then higher, and the stop loss could then be placed below this $107,000 support zone. Then you can be absolutely sure that we'll see another move to the other side. Absolutely sure. You can never be absolutely sure, but statistically unlikely that we will see then a huge collapse to the downside again before we see the new all-time high of this 4-year cycle. Yeah, that's all I have for Bitcoin. Nice but short. And yeah, let's continue with single stocks and so on. Yeah, let's continue with AOS. We have 3 similar situations. The prior 2 have been pretty nice long trades. So I'm expecting similar behavior in price this time. We had a downtrend that was broken. We have the 200 moving average on a daily who is supporting the uptrend. You could argue you see here a head and shoulders formation with a neckline. You can see that one on the 4-hour time frame. That's broken to the other side, and then expect at least an up move, like the pattern is deep, and because of that I'm coming to a 2.4 times my risk trading setup with the stop loss below this prior low here, and the target far away from the all-time high, so pretty conservative. And yeah, at the moment in a small profit, yeah, riding that one to the upper side. If we reach the $82.5 level per stock, I will take my take profit, and if the price goes against my idea, I will get stopped out for 0.5% of my account balance. That's all I have for AOS. Next, Netflix. Netflix, I have done a couple of retests here, and what was the conclusion afterwards was that it's profitable to trade MACD crosses below the 0 line to the upper side, as long as we are above the 200 moving average on the daily time frame. So I entered here long after seeing this last high here getting taken out to the upper side. So far we have seen only sideways movements. My stop loss is placed below the major last low of the last movement, risking 0.5% of my account balance. My take profit is placed at the first Fibonacci extension level, measured from the low to the high of the last major movement, and the corrective move went to the 0.82 Fibonacci retracement level, which is a nice level for continuation of an uptrend. And yeah, 2-to-1 risk reward ratio at the moment in slight loss position. But so if we see prices rise again above this prior high here, and you find this trade interesting, that would be a nice opportunity to get in this long position. That's all I have for Netflix. Next, investor AB. Investor AB, a stock where my entry hasn't got triggered yet. We have a long term rising stock here with a small pause here, corrective move to a moving average, turn from support to resistance. We have struggle with this nearly $300 level per stock here. And the moment we will see a break above the prior highs in combination with the 200 moving average, I would get bullish for this stock and I would enter a long position riding that 2-to-1 risk reward ratio to the upper side, slightly above the prior all-time high, with a stop loss placed below the last major low. The setup stays valid until I either see the entry level taken, then we ride that one higher, or see my stop loss level here taken out, then I would readjust my setup and inform you in my next video like always. Next, Tesla. The Tesla stock on a daily time frame, we have seen an all-time high move, then a collapse of price, downtrend, quite solid, broken to the upper side, then moving inside and sideways consolidation, triangle shaped. Then we have seen the breakout, the retest, and then the break. The retest got broken again to the upper side, and that was the moment for me to enter in a long position with a stop loss below the midpoint of the triangle and the 200 moving average. Then we have seen a nice news, and in combination with this technical setup, we have seen a nice explosive move to the upper side, bringing this position in a good profit so far. I haven't seen a pullback yet and a break of the pullback to the upper side, so my stop loss stays where it is right now. And if we see something like this, and at this moment where we see this prior all-time high of the movement getting taken out to the upper side, I think my stop loss would be also secured at my entry level, and then I take the trade risk-free. The risk-reward ratio is 2-to-1, slightly take profit slightly below the prior all-time high to be conservative with this position. That's all I have for Tesla. Next, Berkshire Hathaway. Yeah, Berkshire Hathaway on a daily time frame, also long-term uptrending stock. We had the price channel to the upper side, that one got broken to the downside, and then we found support at this white solid daily uptrend line, and daily white dotted downtrend got broken to the upper side in combination with the 200 moving average got taken out. The moving average was support and resistance, and now again support. We have seen already the pullback getting stopped at the moment by the 200 moving average. We had seen a slight MACD divergence in price, speaking for rising prices, so I entered a long position with a risk reward ratio of 2-to-1, stop loss below this daily uptrend line and the low of the prior movement, and my take profit is 2-to-1 risk reward ratio far away, slightly below the upper side of this price channel. That's all I have for Berkshire. Everything is near the entry level right now, so if you want to take the trade as well, then there's right now still the possibility starting Monday again, but make research, buy and decisions always by yourself. Next, Snap-on. Snap-on Incorporated on a daily time frame, we can see we have a nice weekly uptrend here with pauses in between. Right now we had a corrective move with the Fibonacci retracement level measured from the low to the high of the movement. We stopped exactly at the 0.618 Fibonacci retracement level, the last hold of an intake uptrend. From there on we have seen the change from downtrend to an uptrend again. At the moment we have seen that the 200 moving average was already getting taken out, and the daily white solid downtrend is also broken right now. I'm waiting now for the last two highs to getting taken out to the upper side. Then my buy stop order gets active, and I'm aiming for a 2-to-1 risk reward ratio, take profit below the first Fibonacci extension level, and the stop loss below this sideways consolidation and this daily support zone for price, risking 0.5% of my account balance. Next, CrowdStrike. CrowdStrike Holdings, also an uptrending stock. Uptrend is intact. We have seen a nice pullback move to the 200 moving average in combination with this daily support zone here. And we had a MACD cross on the daily time frame to the upper side. We had this Fibonacci retracement tool measured from the low to the high of the movement. It stopped at the 0.5 5 Fibonacci retracement level, and from there on started rising again. We have seen a break above this daily white solid downtrend line, then another pullback, and the moment we have seen a break above this local high here, I entered in a long position with the stop loss below this daily support zone and the lowest point of the movement, and I'm planning to ride this trade higher over the last all-time high to the first Fibonacci extension level, 2-to-1 risk reward ratio, the moment in a nice profit, risking 0.5% of my account balance, like always. And yeah, to enter that trade, it's probably a little bit late. If we see a nice pullback and a break of the pullback to the upside, I would again move probably my stop loss to my entry level and take the trade risk free. Next, Blackstone. Blackstone Inc. is a volatile but mainly rising stock with huge crashes in between. We had a huge crash, then supported by the 200 moving average, a nice bull run, huge crash, now supported by the 200 moving average, what I'm expecting a nice bull run. MACD crossed to the upper side, we had the flag pattern that got taken out to the upper side, and the moment I have seen prices above the last local high here, I entered in a long position with a stop loss below this flag pattern here, aiming for a 2-to-1 risk reward ratio, staying below the first Fibonacci extension level, again here measured from the low of the movement to the high of the movement. The correction also stopped pretty nicely at the 0.618 Fibonacci retracement levels, so these levels really work most of the times. So yeah, it's a nice tool I'm willing to use pretty often, also for price discovery in new all-time high areas for my take profit. At the moment in a slight profit, so you can still join this trade if you want to, but it's your decision like always. Next, Alibaba. Alibaba Group Holdings, volatile chart as well. We had an 80% drop, founding here the last lows here was then support. Then we have seen a long-lasting bottom formation before then the first signs of a change from a downtrend to a sideways movement and then to an uptrend occurred. We have here a major weekly support and resistance zone. At the moment we have seen prices violating with that one and then a pullback to the 200 moving average and then a rise again above this weekly resistance zone. I entered in a long position with my stop loss below the 200 moving average. So far that went pretty well, aiming for a 2-to-1 risk reward ratio with my take profit below the next major weekly resistance zone here. There I want to realize my profits, and if I see a nice pullback and a break to the upper side again, I would like to move my stop loss to my entry level and take the trade risk free like always. Yeah, that's all I have for Alibaba. Next, Linde PLC. Linde PLC on the daily time frame, pretty strong rising chart here. We had a nice uptrend. That one got broken to the downside, went into a sideways consolidation supported by the 200 moving average. At the moment we are near the upper band of this sideways consolidation, and I think if we take out the prior all-time highs here to the upper side, we got momentum on our side. I would like to enter a long position with the stop loss slightly below the 200 moving average and with a 2-to-1 risk reward ratio near the first Fibonacci extension level, risking again 0.5% of my account balance. Trade not triggered yet, so everything is still possible. Next, Toyota. Toyota Motor Corporation on a weekly time frame, you can see it's an uptrending stock, even it's not so strongly uptrending like the tech stocks, but still in an uptrend. We drop down to the daily time frame, you can see we had a huge corrective move, a sideways consolidation with a support resistance zone that was held a lot of times for price. Now we have seen the breakout, now again on a lower time frame consolidation, and I think if that consolidation gets taken out to the upper side, I would like to get in a long position with my stop loss below this daily resistance, then turning support zone, aiming for 2-to-1 risk reward ratio far below the prior all-time high, so pretty conservative. Yeah, everything in the cards here. Setup stays valid until I see either the entry level or my stop loss getting taken out before triggering my entry level. Next, applied materials. Applied Materials Inc. Yeah, also a long-lasting uptrending stock. Huge corrections in between. Similar situation we have here, broken daily downtrend line, 200 moving average supporting the breakout. After the breakout of this downtrend, we see a pullback, and then that pullback gets broken to the upper side, and we start into a new uptrend. Similar situation here, broken daily downtrend line supported by the 200 moving average, corrective move after the breakout, and now it seems like this corrective move gets soon taken out to the upper side and start a new uptrend. I got already long after seeing prices above the 200 moving average and the cross of the short-term 10-day moving average and the 200 moving average crossing to the upper side. MACD also was crossing, and we had here a nice support zone, and also the pullback was measured from the low to the high of this movement. Pullback went straight to the 0.618 Fibonacci retracement level and started rising from there on. So I placed my stop loss below that level, entry, and my take profit is 4 times my risk far away at the second Fibonacci extension level and slightly below the all-time high of this stock. So yeah, if you see a pullback here, which is likely, you can still think about re-entering this trade by yourself. So now what follows are the new stocks I haven't covered yet in prior episodes. So yeah, let's start with ASML. ASML Holdings, one of the most important stocks in the semiconductor industry, also volatile. We have seen huge pullbacks, huge bull runs, and huge pullbacks. Similar situation, broken daily downtrend line supported by the 200 moving average. We've seen a pullback, which was also supported by the 200 moving average, and from there on rising prices. Here, similar situation, support by the 200 moving average, pullback, break of the pullback to the upper side. I entered on a long position, stop loss below the last pullback, and yeah, aiming for a risk reward ratio of 3 to 1 this time, because the Fibonacci extension level is far away, or that far away, and my expectation for this industry is also pretty good, so I'm riding that one higher. If we see sometime a nice pullback and break of the pullback to the upper side, I would then also move my stop loss to my entry level and take the trade risk free. Next is Xylem Inc. Xylem Inc. is also a long-lasting uptrending stock. At the moment, we are running into a huge weekly pattern here with this weekly resistance zone and this rising weekly uptrend. At the moment, we are at the upper side of this pattern, and I think if we see a break of this pattern to the upper side, that could bring a lot of momentum into this stock. So I'm wanting to get then in a long position. If we drop down to the daily time frame, we can see in more detail. We are slightly below the prior all-time high with a flag pattern right now. And if we see that breaking out to the upper side, I will go, my buy stop order gets triggered. My stop loss is placed below the prior daily support zone here. And I'm aiming for risk reward ratio of 2 to 1, slightly below the second Fibonacci extension level, measured here again from the low to the high of the prior movement. That's all I have for this stock. Next is the Viper Energy Inc. stock. Viper Energy Inc. That stock had struggled with this $35 level per stock. We bounced a lot of times around this area, but we are in an overall uptrend right now, and we've seen the break and now a pullback exactly to this key level, which is normally a good support area. You see at the moment we are in sideways consolidation, indecisive in which direction to go. I think the more likely one is the upper side. So if we get above this sideways consolidation, I would like to enter in a long position with my stop loss below this to the lowest point of this downtrend movement here. Right, that with a 2 to 1 risk ratio to the upper side, slightly below the prior all-time high, which would then act again as resistance for price. Not triggered yet, so everything is possible. Next is an ETF, the MSCI World India ETF. MSCI World India, yeah, that index or this ETF is also pretty bullish, long-lasting uptrending trend with pullbacks in between, supported then most of the times by the 200 moving average, at least the breakout. The same we have here, all-time high, so key level, pullback to this key level, slightly dipping below that, 200 moving average getting resistance, now turning against support. We have seen the breakout, the pullback, and now the pullback probably is over. We see a daily MACD divergence to price. So I entered after seeing getting point A, B, C. So point, let's draw that one in. ABC pattern, point B was getting taken out, even not with a daily close, but intraday, and entered a long position with my stop loss below this complete movement and the 200 moving average, aiming for 2-to-1 risk reward ratio, slightly below the prior all-time high at the moment, near the entry level in a slight loss. So you can still re-enter that trade if you think that's a valid setup and suitable for your own trading style. Next, MicroStrategy. MicroStrategy, or right now only Strategy Inc. Rename that stock. It's mainly a Bitcoin stock. So if Bitcoin goes to the upper side, the stock should go up too, even not 101. I think if Bitcoin makes new all-time highs, the probability is there that MicroStrategy is also making new all-time highs. The daily orange uptrend is still intact. 200 moving average was price support. At the moment, a little bit of resistance, but I think if we see a break above this 200 moving average in combination with this 4-hour support and resistance zone and this daily downtrend break also to the upper side, I would risk an entry with a long position with my stop loss below the low of the prior movement and this 200 moving average plus rising weekly uptrend line. And I would aim for a huge risk reward ratio, 4.5 times more risk, slightly below the first Fibonacci extension level. And also this is a sideways consolidation, you could argue. So if you take the depth of this sideways consolidation and put it to the upper side here, you could see there's a big move to come if we see a break above this sideways consolidation, and also the Fibonacci extension level measured from the low of the high to the last prior movement, and that is the first Fibonacci extension level at $665 per stock. And yeah, so highly volatile and risky stock. I'm using my risk calculation here and risking only 0.5% of my account balance to make 2.7% of my account balance. So I think good risk reward ratio. You can think about if you would like to take this trade too. Setup stays valid until I see this lows taken out to the downside, then I will delete this setup. Next, BYD. BYD, Chinese car manufacturer, also in a long-term uptrend, had the long-lasting sideways consolidation. That one got broken to the upper side, and now we have seen a corrective move to this key level, supported by that 200 moving average. At least if we break that one now to the upper side, we have a wide solid downtrend line, MACD making a slight divergence, falling prices, rising MACD. So there's the possibility that we'll see a move to the upper side in the coming days and weeks. And I would like to enter in a long position if we take out the prior high here of this smaller short-term movement with my stop loss below the lowest point of that movement, and then hoping for rising price slightly below the first Fibonacci extension level is my take profit place, 2.5 times my risk. And yeah, still everything possible. Setup stays valid until I see either the entry and we continue that rise to the upper side, or a push lower. Then I have to adjust my downtrend line, and I probably delete this setup till the moment we will see another break of this new daily downtrend line then. So what follows next are the two altcoins I added to the list. Ethereum against the US dollar. Yeah, crazy volatile movements here, long-lasting rising, like you can see. But yeah, Bitcoin was the better investment vehicle in the crypto space, definitely. We have a long-lasting sideways consolidation, I would argue here, and this major weekly resistance zone that recently taken out, slightly new all-time high for Ethereum. And at the moment we are consolidating on a pretty high level. This could get a flag pattern, if you will. I would speculate that if we see this all-time high getting taken out to the upper side, we got fresh momentum into the market, and then I would expect a nice movement to the upper side. Stop loss is placed below than the low of this movement or this weekly resistance zone, then turning support. And 2-to-1 risk reward ratio far away, I take profit slightly below the $7,000 mark per coin. Yeah, let me know in the comments what you think about this setup. Next, Ripple. Yeah, Ripple against the US dollar, even volatiler than Ethereum. You can see it has done pretty much nothing, and then from $0.50 to above $3 per coin. We have an intact uptrend here, like you can see with this weekly orange uptrend line. We had a broken daily downtrend, breakout, retest, breakout of the retest to the upper side. Then we went into a new flag pattern here. There, the secondary daily downtrend line is already broken to the upper side. We are retesting that one right now. And if we take out the retest to the upper side, I would enter a risky trade here. Because of that, I'm limiting my risk here with 0.5% of my account balance, and I would aim for 2-to-1 risk reward ratio to the slightly below the secondary Fibonacci extension level for my take profit. Yeah, if the crypto space goes wild, then it goes normally definitely crazy wild, so I'm speculating right now on that. Let me know in the comments what you think about it. I hope you found a couple of trading ideas for yourself out of this video, and subscribe to the channel if you haven't yet, because next weekend a new video follows with new trading ideas. So have a good one. Till then, bye bye.